Good evening, friends. This is my 7th video on stock market strategies and techniques. Today, once again, we'll talk about the techniques and strategies and the thinking of the greatest investor in the world, namely Warren Buffett. Warren Buffett emphasizes one fact. See, the system allows you to become rich. He talks about the American system, but now the Indian system is just similar and it allows you vast opportunities to become rich. What are you waiting for? Get into the system and become rich. When you enter into the system of stock market, some habits that we may have need to be given up. Some habits may have to be broken and some others may need to be cultivated. He says, some habits are like chains binding you to them and not allowing you to move forward in life. When they are forming, it's like laziness, like unwillingness to come out of your comfort zone. Such habits are there. When they are forming, you don't even notice them. But once they have taken roots in your mindset, they don't allow you to put in any great initiative to move forward in life. So, any such habits which you may have, like laziness, I have highlighted two habits. Unwillingness to come out of your comfort zone, unwillingness to be patient, unwillingness to examine things by yourself. So these are some of the habits which many people have. It's not that we can't get out of those habits, but we can. We must try consciously to get out of such binding habits. And of course, we can cultivate some good habits like patience, discipline, initiative, and frequently coming out of the comfort zone and taking big initiatives. Such good habits we must take. In stock market, there are two varieties. The basic investment is in equities. There also you have short-term investment, medium-term, long-term. Warren Buffett prefers long-term equity investment. But there is another thing called derivatives. What is derived on the basis of equities? Equities are simple enough to understand. Their behavior also can be predicted to a certain extent and you can profit from that. On the other hand, derivatives are complex instruments built on equities. Now, if you have not succeeded in equities, how are you going to succeed in more complex instruments like derivatives? Derivatives don't follow any clear logic. Therefore, succeeding in derivatives is very difficult. So, Warren Buffett's advice is do not get into derivatives. Go for long-term equity investment. In long-term equity investment, your basic temperament is more important than your intellect. Warren Buffett himself says, I got into this investment habit at the age of 11. So anybody can get into this long-term investment habit at very early ages. And all that you need is your temperament must be a little suitable for long-term investment, which requires discipline, patience, and the ability to wait for some time. These are more important than your talent and your effort. Can you wait for some time until you can make the right buy at the right time? So buying at the right time and the right script is very important. Likewise, holding for the right time and selling also likewise. You must wait till you get the opportunity and the right time and the right price to sell. So that requires patience, discipline, and the time, appropriate time. You have to wait for that. That's more important than your talent and effort. Just don't go on mechanically every day. I must sell something, I must buy something. That's not correct in respect of long-term investment for successful investing career. Now, market is always fluctuating. One day it goes up, second day it falls down. Or maybe sometimes 1 week it goes up, next week it falls down. Sometimes it goes up for 4 or 5 months or even 1 or 2 years, and then for 2 or 3 months it falls down. But overall, in a developing economy, the overall fluctuations, if you map them, you will find that the trend is upwards. But in the upward trend, there are always downward cycles also. These fluctuations, upward, downward, these are your friend. They are not your enemy. You can take advantage of these fluctuations and become rich. When the prices come down, you can go and buy. When the prices are high, you can keep quiet. But of course, sometimes we make mistakes. Warren Buffett very openly acknowledges that he also made a number of mistakes. But of course, the number of mistakes must be outweighed by the number of successes. That's all. That's what is required. He says in Dixon Shoe Company or something like that, he put in some $400 million and soon it became zero. He has lost. He admits that. At the same time, he cites his great success, Berkshire Hathaway, in which he put the same $400 million and it became $400 billion. 400 millions became 400 billions. So that's the amount of success you get in certain investments. And where you lose heavily there also. It happens sometimes. Now, the market fluctuates. That's what we said. Why does it fluctuate like that? People become greedy when the market is in an upward momentum. When demand is much more than supply, the prices will shoot up. Daily prices are shooting up. People are becoming greedier and they feel that the market is an upward trend ad infinitum. It's not going to come down. That's the feeling generated in the minds of the greedy people. When the prices are going beyond the comfort level, beyond what you perceive as the intrinsic value, then come out to the market, sit quiet. That's what Warren Buffett says. When people are greedy, you become fearful. Then when you should become greedy? When all others are fearful and all others are selling, when the price trend is downward, prices are falling because people are continuously selling. They feel now that the prices are going to be down and down and down for a long time. At that time, you become greedy and then you buy good stocks. Don't buy any bad stocks, then also go for good stocks. So, in this investment cycle of greed and fear, sometimes the market pundits, the media, they come out with comments like investors lose trillions as market falls. Warren Buffett laughs at this commentary of the media. He says, where are the investors losing when the market is falling? It is the disinvestors who are actually losing when the market is falling. They are selling at lower and lower prices. So the disinvestors are losing heavily. Whereas the investor is buying at lower and lower and lower prices, and he is going to hold on to those scripts which he has purchased at lower and lower prices for some time to come. When the market again goes up, he may feel like selling. That is when all other people become greedy, he might like to sell at that time. Now he is not fearful. So at that time he might sell or he might still hold. For a long term investor, the holding time is very large, maybe 10 years, maybe 5 years, maybe it is forever. You can hold on to a great script forever also. There is no problem. Market presents such opportunities of upward momentum and downward momentum always. Likewise, market presents many other opportunities. You find a script which is not noticed by the majority in the market, which is at a low price, stagnating. Now that's an opportunity for you. Before the market notices such a script, if you notice a script where the value far exceeds the price, there you go and seize the opportunity, buy that share. Sooner or later, market will definitely look at that opportunity and the market price will go up. That's the time when you will profit. So these are some more of Warren Buffett's important thoughts. Warren Buffett, he is no doubt a great investor. He has made investing into a very great art with clear principles. If we follow them, we will also profit. Thank you all for listening. I will come up with some other topic, an important topic before you soon. Thank you.